Hello everyone, today I'm going to share about my 3-2-1 method on picking stocks that I intend to hold for long term, 3 steps to find my list of stocks, 2 bonus tips, and 1 important note. But before I dive into the details, hope you can give this video a support by tapping on the like button. It will really help out with the YouTube algorithm. Your little support means a lot to me. First step, define your investment and financial goals. Some wish to retire early, some want to grow their wealth to beat inflation. Age also plays a part. Younger investors who have a longer time horizon and higher risk appetite may want to grow their money as much as possible, so they will likely look for growth stocks that can 5x or 10x in the next couple of years. They may also not mind investing in stocks for the future world such as robotics, genomics, metaverse, etc. And all this usually carry higher risk. On the other hand, older investors would want to preserve their capital and maybe also cause their heart can't take high risk, high return kind of investments. Anyway, they will likely look for solid and matured stocks like Coca-Cola, McDonald's, and Starbucks, or stocks that pay them passive income in the form of dividends. These stocks are less riskier. It's okay if you don't fall into any of the description, there is no right or wrong. The key thing here is what is your investment goal. Okay, the next step is to research and find company or companies that you understand. Because if you don't understand the business, you are settling yourself up for failure, speaking from experience. You can identify a sector by drawing ideas from your job or interests. For example, say you are doing marketing, you can look for software related to your work such as Salesforce, Google, etc. Or if you are in cybersecurity industry, you have CrowdStrike and SentinelOne. But what if you are a boring person with boring job and zero hobbies? Okay, just take a look at the things around you and the brands that you encounter every day as a start point. For example, which brand of mobile phone are you using? Which company is making your lotion, shampoo, and diapers? I mean your baby's diapers, not yours. Which platform are you watching this video on? And which social media do you use to engage your friends? And which one you use to talk to your fling? Okay, brands like Apple, Johnson & Johnson, YouTube, WhatsApp, etc. will come to your mind. But if you are living in your room 24/7 and don't see much of the world outside, the last solution is to check out S&P 500, which tracks the performance of 500 largest companies listed on US, and narrow down your options from there. Just to share, thorough research can be broken down into fundamental and technical analysis, which I will not go into the detail. But in a nutshell, fundamental analysis is to study everything from the overall economy and industry conditions to the financial strength and management of individual companies. Technical analysis aims to identify opportunities by looking at statistical trends. They use stock charts and movements to identify patterns that suggest what a stock will do in the future. Fundamental analysis includes company news, management team, balance sheets, dividends, earnings releases, and various ratios, such as PE ratio, DE ratio, PG ratio, etc. Technical analysis includes momentum indicators, trend lines, support and resistance levels, moving average, exponential moving average, etc. Okay, enough of the boring stuff. So after you have research on the industries, now is to pick the winners in each industry. The winners are usually leaders in the particular sector and have strong moats, that is, competitive advantage which others are unlikely to replicate or overtake anytime. A moat can come from different sources and areas like business skill, switching costs, unique brands, IP, and supply chain. In addition, I personally will also see if the brand has achieved top of mind awareness. To explain in simple terms, it is the first brand that comes to mind when consumers think of a certain niche or product. For example, if I were to ask you to name a soft drink brand, a mobile phone brand, and a fast food restaurant, your answers will likely be Coca-Cola, Apple, and McDonald's. Yeah, some may answer Pepsi, Samsung, or KFC, but the former will probably be named first by maybe 8 out of 10 people. But to clarify, when a brand achieves TOMA, it does not mean it's a good stock. This is just one additional pointer that I use to measure my stock picks. I mean, they are the top of consumers' mind for a reason, right? Most likely they are dominating their industry. But the potential downside is it could mean that their growth may have declined and they could be replaced if they don't innovate, such as Kodak and Nokia, who is no longer connecting people. Okay, here's 2 bonus tips for you. Personally, when I pick my stocks, I will look at the total addressable market. In other words, the sales and opportunity that is available, as well as the potential scale of the market. You would want companies that can push their products or service to every part of the world, right? Usually such companies are international organizations with world-class executions, and their market is huge, such as Apple, Tesla, Netflix, and Google. While on the other hand, companies like Grab and Uber have smaller addressable markets as they only operate in certain countries and regions. Next up, diversification. Personally, I will diversify my portfolio by spreading them in different stocks across various sectors. This will help me manage and mitigate risk. For instance, when my Tesla stock tanked recently, I have my Apple stock to carry me, as they are from the different industries. Some investors view diversification is only for people who don't know what they are investing in. It's true, to a certain extent, because you are not confident in stock picking, hence you diversify by say buying into ETFs that contains a basket of stocks, which is nothing wrong. For me, I diversify, but not over diversify. This is done by picking about 5 to 7 stocks from 2 to 3 fast growing sectors. Anyway, my advice is do what is best for you. The one important note that I would like to share is that at the end of your research process, you may be left with only one single prospect or maybe a few companies. Then, good for you, focus your wealth and invest in these few companies. But what if you realize this industry that you research on doesn't make the cut, or you don't have very high conviction in the stocks that you have narrowed down? That's fine. I mean, think of it as all of that research may have stopped you from making a bad investment. The last thing you want is to invest in the stocks just cause you have put in lots of efforts to research on it. Knowing when to say no is an important aspect of picking stocks too. Finally, I just wanted to say, hope is not an investment strategy. You don't invest in the stock hoping it will increase without justifications or strong basis. You go in because you know the chance of it going up is very high. Also, be sure to fully understand how the company make money, or else you should find a different company. Also, learn to identify future opportunities and trends that are massive. For example, electric vehicle, robotics, AI, cybersecurity, metaverse. These are the sectors that will change and shape the world in future. Alright, that's all for this video. What methods do you use when you pick a stock? What are the things you look out for? Let me know in the comments section below. Lastly, thanks for watching my video. Hope you can like, share and subscribe to my channel to show a little support. Thank you.